Hello everyone out there, this is Peter Harris from Commercial Property Advisors, once again, author of this book, Commercial Real Estate Investing for Dummies, and coach and mentor to many commercial real estate investors all across this great nation of ours. The title and subject of today's video is Tax Benefits of Commercial Real Estate. Recently I received what I thought was two very intriguing questions. The first question was, Peter, how does Donald Trump and other billionaires make $1 billion a year and end up paying no income taxes? How is that possible? The second question I get is, how does Donald Trump and other billionaires show a huge loss on paper, a $975 million loss in this case for this guy, right? And other billionaires can show a huge loss on paper. Why is that a good thing? Well, I'm here to tell you that those two situations, right, whether it's $100,000 a year or $2,000 a year, is what we call commercial real estate ownership advantages. These are two legal tax loopholes that you can take advantage of. You don't have to be rich or famous to take advantage of these two legal tax loopholes. Let me share two big numbers with you. The first number is 2.1 trillion. The second number is 17.1 trillion. Two huge numbers. This first number, 2.1 trillion, is the amount of money that the U.S. Tax system takes in a year, income taxes from taxpayers. Okay, so they're collecting $2.1 trillion every year, a whole bunch of money. However, they are paying out in tax benefits $17.1 trillion, 8 times more than what they are taking in. Why such a huge disparity? So the U.S. tax system is taking in $2.1 trillion, but paying out $17.1 trillion in benefits. Why the huge disparity? Well, the reason why is because there is a lack of education for the average real estate investor and commercial real estate investor on the legal tax loopholes. Now, in this video, I'm going to share with you most of that. I'm going to share with you 3 people. The first person is going to be a person who has a full-time job and owns no real estate. I'm going to share with you his situation. Okay? It's dismal. I'm going to share with you the person who has a full-time job and owns some real estate. It gets a little better here, but the best person, okay, the person with the most benefits, all right, and what I define as a person who's financially free or very close to it, is a person who works full-time in real estate. All right, I'm going to share with you all 3 situations, and equally as important, I'm going to share with you how to go from the person owning no real estate to owning some to being a full-time commercial real estate investor. Okay, let's jump into the 3 taxpayer situations. Before I begin though, I want to say a disclaimer. I am not a CPA. I am not a tax attorney. All right? I am not a tax expert. All of my tax strategies and tax returns are done by professionals, not by myself. So I am a commercial real estate investor. So everything I share here is in principle. Okay, got it? All right, so let's move on. I have 3 distinct situations, taxpayer situations. However, all 3 situations fall into this tax status, married filing jointly. Okay, got it? All right. So this first person or couple, right, full-time job and no real estate. The second person has a full-time job and owns some real estate. The third person is a full-time real estate person. So their job is in real estate. So they are known as a real estate professional. Real estate professional is an IRS designation that allows you to maximize your tax loopholes. All right? And basically what you have to do is all of your time spent on work, right? More time has been spent on your real estate activities than anything else to qualify for real estate professional. You must also spend at least 750 hours of work in 1 year on these real estate activities. All right? So again, this is just a general definition. If you want more, go ahead and look online for this designation. This is your goal here. All right, so number 1, this person here has a full-time job in real estate. They have minimum tax loopholes, okay? Minimum. The second person has a full-time job in some real estate. They have tax loopholes, but there's limits on it. This third person, who is a real estate professional, has maximum tax loopholes. We talked about Donald Trump or other billionaires not paying any taxes after pocketing a lot of money, right? This is where they play. All right, so back over here. Full-time job, no real estate. You're going to pay the most in taxes. All right, you have very few write-offs, and you don't want to stay here. Your job is to graduate, is to learn commercial real estate and graduate to number 2, all right, where you have a full-time job and some real estate. All right, at this point, you qualify for $25,000 in write-offs on your real estate, right, that you wouldn't have over here because this person has no real estate. So this person can write off $25,000 in losses, depreciation, repairs, mortgage interest, all these fees they can write off if your income is $100,000 or less per year. All right, then you qualify for a $25,000 write-off. If your income is $150,000 or above, guess what? You get no write-offs, right? That's why if your income is over $150,000 and you own a bunch of real estate, your goal, and you have no write-offs, your goal would be to get into number 3 where you can write off almost everything. All right, so number 3 is full-time real estate person and a real estate professional. So basically this person can be an agent, it can be a property manager, it can be a real estate investor managing your own portfolio. Okay? All right, so you have maximum tax loopholes here. Again, this is your goal. This is where you want to be. If you're here today, you don't want to be here too long. If you're here today, congratulations. If you're here, welcome to the club. You have a maximum write-offs. You can write off your car, your home office, all the repairs in the building, depreciation. You can maximize your write-offs on the properties and end up paying no income taxes at the end of the year. And also, being a real estate professional in commercial real estate is what sets apart commercial real estate from all other investments. If you were to make $200,000 profit in your stocks, in your stock portfolio, you're going to pay a whole bunch of taxes. If you make $200,000 in your commercial real estate, it's very possible to pay no taxes or very little taxes. All right? And lastly, this is where the billionaires and the millionaires play. However, you don't have to be one of these guys to play here. You just have to own some commercial real estate, but spend all of your time in commercial real estate to have this designation. All right, so next what I'm going to do is I'm going to erase the board here. I'm going to put numbers here in each category to make it all make sense for you and see how you can put yourself in these categories and maximize exactly where you want to go. All right, let's put some numbers into all this and let's make sense out of it. All right, okay. So again, I have the 3 categories. I have the full-time person with a full-time job, no real estate, a full-time job, some real estate, and real estate professional, works real estate full-time. Now, okay, so this guy, full-time job, no real estate, he makes, his W-2 income is $100,000 a year, right? And don't forget, like I said earlier, all 3 are married filing jointly, okay? Don't forget. All right, so W-2 income of $100,000 a year. The next 3 are his write-offs. So he can write off a home mortgage, he can write off his IRA, and he can write off some personal exemptions. So after writing off $25,000 in a home mortgage interest, his IRA contribution, and his personal exemption, his taxable income becomes $63,000. All right. So he made $100,000 on his job. As a result of his write-offs, he's going to be taxed on $63,000. Okay, pretty typical. Okay. Now the guy with a full-time job who owns some real estate, he's also bringing in $100,000. He's making an additional $5,000 a year on his real estate. Remember, he has some real estate here. And then he starts writing off his home mortgage interest, $25,000, his IRA contribution, his personal exemptions, and then he gets to write off depreciation. All right? So home mortgage interest and depreciation are your 2 biggest benefits of real estate ownership. you get to write off both of those, all right? So long as you meet the income qualifications. Now, a little bit on depreciation. What that is the IRS allows you to write off the value of the building over some odd years. Here's an example. Let's say you have a property worth $1 million, all right? And out of $1 million, $300,000 of that is land, $700,000 of that is the actual building itself. The IRS allows you to write off that $700,000 in building over 27 and a half years. So it's simple. All you do is do 700,000 divided by 27 and a half years, and you get to write off $25,000 a year. All right, got it. Now again, this is the beauty of owning real estate. You get to write off depreciation. This person, since he has no real estate, cannot write off any depreciation. All right, so this guy, he only made $5,000, but he gets to write off $25,000. That's huge. That's huge. So as a result, his taxable income becomes $43,000. All right, so $20,000 less than this guy. All right, so this guy made more money, right, than this guy, right, but he's paying less in taxes. Okay, again, as a result of owning real estate. Now let's get over to number 3. All right, so this guy, he's works full-time in real estate. He's called a real estate professional. He's pulling in double the amount of money of these guys, all right, because of his real estate. So he's making $200,000 a year, all right. He also gets to write off his home mortgage. He gets to write off his IRA contribution, his personal exemptions. But guess what? He gets to also write off depreciation on his entire portfolio. So it comes up to be, in this case, $75,000. He gets to write off, he has commercial properties. He gets to write off the commercial mortgage interest of $50,000. And he has other various write-offs. He gets to write off his car, his home office, repairs on the property, all these things. He gets his trips, his education, his mentorship. He gets to write all that off. Comes out to be $40,000. All right. So again, he pulled in $200,000 in his real estate income, and as a result of all these write-offs, his taxable income comes out to be negative $2,000. All right. So which one? Where would you rather be? 1, 2, or 3? Of course, number 3. He brought in twice as much money as these guys, and guess how much taxes he's paying? 0. So, do you recall about 7, 8 minutes ago, I talked about Donald Trump and other billionaires making a whole lot of money and not paying any taxes? This is the reason why. And the second question earlier was, how can a person show a loss on paper, right, and that be a good thing? Here's the situation. Minus $2,000 in a loss. Is that a good thing? Yes. But guess what? It gets even better. Because you have this loss of $2,000, you can take this loss over into the next year and write off against next year's income. So again, this is the extreme benefit of owning commercial real estate, the tax benefits. So again, you don't want to spend too much time here, all right? You want to get from here to here. Once you're here, you need to have a good plan to get here. This is where financial freedom, this is where the big boys play. Again, you don't have to be a big boy. You just have to own commercial real estate. All right, so what I want to do next is I want to give you a real life example with a real person, a real income, and a real property, and show you how it works. Okay, now let's make sense out of everything we just learned these last 10 minutes or so. Okay, so I prepared a real example for you. All right, so I have Dr. Rob. He is a engineering manager for a high-tech firm here in Silicon Valley. He's a PhD in engineering. He makes about $250,000 a year, and that includes bonuses. He also owns a 12-unit apartment building and a strip center located downtown. These two properties cash flow about $82,000 a year. So between Rob's salary of $250,000 per year and his two commercial properties, he makes about $332,000 a year. All right, so pretty good, not too bad, right? And then once his CPA prepares his tax returns on the 12-unit strip center, it shows a paper loss of $90,000, okay, per year. But guess what? Dr. Rob can't take advantage of those losses. because he makes over $150,000. Remember that limit? So when you make over $150,000, you can't take any passive losses. So he's going to pay, so Dr. Rob is going to pay income taxes on 250 and on 82. Ouch. Ouch. So what's the solution? All right. Here's what we did for Dr. Rob. And this is actually what he did for himself. All right. The solution was Dr. Rob met Joan. Okay. And she became his fiance, and then she became his wife. So so the solution was for Dr. Rob was to get married. All right. So he got married. And guess what? Joan began operating as a housewife and also as a full-time real estate investor, taking care of rehabbing the 12 units and overseeing the strip center. So she didn't have a job. Her job was to do real estate full-time while Rob worked at his tech firm. Okay, so what happened was Joan qualified as a, guess what? A real estate professional. Remember that? So now that Rob and Joan are married and they're filing their taxes jointly, right? So now Rob and Joan can take advantage of the real estate professional status, which means they can maximize their loopholes. And here's how it affected everything. All right. So because she was qualified as a real estate professional now, this $90,000 loss, okay, this loss here on paper, they can apply to the cash flow. So you have a cash flow on the property of $82,000. You subtract the loss, all right, that's negative $8,000. So they're paying now no taxes on this $82,000, right? It's actually negative $8,000. Guess where they can take that negative $8,000? Into Rob's salary, right? Because they're married, filing jointly, and because now Joan is a real estate professional. Okay, you got it? All right, so again, in summary, Dr. Rob, high salary, right? Owned real estate, could not take any passive losses on his returns because he made too much money. He made over $150,000. His solution was to get married and have his wife become a real estate professional by working on his two properties full-time. She did nothing else other than being a housewife, which is harder than being a real estate professional, by the way. A housewife, but she operated these two full-time, and that allowed them to take advantage of the real estate professional status. All right. Last question is, what recommendations do you have for Dr. Rob and Joan? What recommendations? Here are the recommendations. Buy more real estate. Buy more commercial real estate, because the more you buy, the more losses you're going to have and the less taxes he will pay on his salary. All right? So his goal is for her and him to buy more real estate where he pays no taxes on this. Wouldn't that be incredible? Well, that's the power of knowing the U.S. tax system and taking advantage of these legal tax loopholes. All right, so, all right, let me wrap up this video with 3 short things. Number 1 is I want you to learn commercial real estate. I have a bunch of videos. I have a free book, Learn Commercial Real Estate, and then get help. Don't try to do this business by yourself. There's too much at stake. And lastly, become a real estate professional, period. By now, you know all the benefits of starting from here, making it here, and making it here as a real estate professional. You know by now. Number 2 is to hire a CPA who specializes in helping real estate investors. Not all CPAs are created equal. Hire the ones that work specifically with real estate investors. They are not all created equal. All right? All right, number 3, a quote that I found, it's the greatest investment on earth is earth. All right? There is nothing like investing and owning a tangible asset, right? In terms of maximizing your cash flow and maximizing your tax savings, okay? All right, that's all for today. Thank you for hanging out with me and watching this video on tax benefits of commercial real estate. If you want more videos like this, please go onto our website, commercialpropertyadvisors.com, or simply subscribe to this YouTube channel. Thank you for watching, and I'll see you at the next video.